Okay, so last week when I did this, I got some good feedback. And the feedback I got was let's update the actual Excel spreadsheet together so that we can all kind of see what happens on a month over month basis. So here's the Excel spreadsheet, and you can see the numbers from last week on the Freehold side. We were at 2.59 months of inventory. So let's go back now and fill these numbers in, and you can see how these adjust in real time because some of you are kind of worried about what those numbers actually look like and why they're changing. So if you look at, let's look at this week. So this week, we're at, say, 1580 listings. So let's fill this in. And we had a total of 452 sales. So 2.7. Now, let's go back and fill in the previous week. So last week before that, it was 1586 instead of 1585. So you can see here. See, this is the data I'm talking about. So let's change this to 1586. And sales last week, when I did this, it was 608 reported. But now you can see there's almost a 200 jump here. We're at 808. So again, why is this happening? It's because some of the agents are reporting the data late. And when that happens, it bleeds into the next week. So looking at the week before that, if we look at the number of listings, 1971, and then even here, this number has now changed to 807. So now we're sitting at 2.5 months of inventory extrapolating that data, which means that we're in a seller's market for GTA Freehold, not including Halton. Now, in terms of the optics around the data, there's a couple of things actually, not just two things. So let's go through a couple of things that are very important. First thing to appreciate is that we have the US election in November. That's one thing that's going to impact what happens in this country. The second thing is that next year we have a Canadian election. I think the government may try to prorogue, they may try to halt Parliament so that they don't end up out of power. If they can manage, our election will be next year if they can maintain control. Okay? So you start thinking about politicians and the politics around this. In this current economy and climate, the politicians are going to want to make sure that we feel really good, especially towards the end of the year. So this Wednesday in the morning, the Bank of Canada is going to announce the next rate drops. It's going to be our fourth drop announcement. The question is it going to be 0.25% or 0.5%? That's usually the dialogue I'm getting right now when I'm conversing with bankers and mortgage agents and whoever I'm talking to in my network. I think it'll probably be 0.25%. It might be 0.5%, but the reason I think it'll be 0.25% is because the next announcement in December after that, especially during the holiday season, you want people spending money for holidays, but you also want them to feel good about the money that they're spending. And so I think if you have 0.25% in October and then 0.5% in December, that means that you're setting up the next year in a very positive tone, right? How you end this year is how you start the next year. That's what I think. That being said, we're going to see two drops because if you take out the mortgage interest from our inflation numbers, we're almost de-inflationary. Like it's crazy. The inflation numbers are not the same. The 2%, that article I posted, 2% last 2019 is not the same as 2% now because the optics around the numbers that are filling in that basket are very different, right? And we know that with the 10 consecutive rate increases that we saw, taking us all the way to 5%, every time the bank upped the rate, that increased inflationary pressure. And every time they're reducing that rate, it's reducing that pressure. And so now we're going to start seeing an adjustment. And the data does tell us, we've been looking at this week over week, that if you're thinking about entering the marketplace and we look at the average sale price the last 12 months, let's look at it weekly like we always do. If you look at the average sale price, it hasn't done anything crazy. Like our low was January, and this is 1 week, and then the entire last 52 weeks, where from there it started progressing upwards week after week, and we've just kind of been hovering around the 1.314 range. Why? It's because supply and demand have been relatively stable. Look at the gap between supply and demand here. There is it's negligible, right? Like the months of inventory here is so low, it's laughable. And it widened, we saw with our first rate decrease announcement, the number of listings shoot up. And then a new peak was reached in September when we saw the next rate announcement. But since then, it's really been closing in. And it's typical to see that during this time of the year, as it gets colder and it's a little bit more seasonal, a lot of sellers are saying, I'm going to wait for the spring market. But that's not a COVID thing. That's not an inflation thing. That's not an interest rate thing. That's just how people are. The last 20 years, if you look at October, November, December, the market contracts because people are like, it's cold now. It's dark at 5 o'clock. People aren't going to want to run around in the snow. Let's just move and wait till the spring market. Now, if we see the 1/4% and the 0.5% or the 0.5% and the 1/4%, money's going to become cheaper. People are going to start feeling positive. Anybody that was looking for the deal, if they're looking at the data that you should be providing them, it's about to kick off, right? When you look at supply and demand, you look at the optics of affordability, it's not going to get cheaper. If it was going to get cheaper, we would have already seen that in the last 52 weeks. We haven't seen that. So knowing that it's only up from here and money's going to become cheaper, more and more people are going to enter the market. And with more people entering the market and the supply of inventory dwindling, we're going to end up in a very interesting paradigm where you're going to start seeing multiples. We're seeing multiples now, right? In a certain segment between 500,000 to 800,000, the property is reasonably, capped and it shows well. You're going to still see 20, 30 offers. We're seeing that even today, despite everything. It's the properties that are over the $1 million mark that we were having some issues, but now we know there's new mortgage rules that are coming into effect. I think it was November, where it's going to be 1.5 million. You won't need 20% down until you hit 1.5 million. So once all of these things come together, interest rates, that new rule change, stress test, all these things come together, I think it's about to skyrocket again. And we know we're not building enough homes. Like our peak building was the 1970s. So if we're not building enough homes, and a lot of the projects are now getting canceled, like I was shocked to hear last week that Centricity canceled. Like that was one I was rooting for. Prime location, good builder. To hear that that project got canceled made me a little bit unnerved. And so even properties that were supposed to add to the supply are now being terminated and taken off the market. It really tells you that what Johnson said last week in our training with the Platinum Mindset, 2027, 2028, 2029, we are going to see the impact of what's happening now then. Anybody who understands that understands the opportunity. So yes, some pre-construction properties have adjusted. If you find the right properties, or if you're in the resale market and you get a good deal right now, don't worry about the cash flow per se. Like it's not about cash flowing $100 a month. Look at areas that show an appetite for appreciation. Look at the home price index, because if in 5 years you'll see a 30 or 40% bump on $1 million home, we're talking $250,000 plus in profits. So if somebody is renting and they have the appetite to own, I think they should be in the market to own. If somebody can only rent, then they should continue to rent. If somebody's an investor who has a principal residence and is now looking at an investment property, even the capital gains bump to 67%, it's not material enough to stop you from entering the marketplace. It's about finding the right property in the right location that's going to appreciate properly. If you can do that, you'll do quite well. So supply and demand are converging. We're sitting at 2.5 months of inventory right now on the freehold segment side of things. Prices have been stable, and think about it, we're in October now, but it looks like it's trending upwards. That's pretty interesting. If you look at the average ask to sell ratio, it's still hovering right around the 1 mark. Like we're still over the 1 mark last week, which tells you properties are selling over asking or at asking and rarely under asking now. But we know that last month we had a 30% terminate relist ratio. So taking all these things into consideration looks very positive as far as I can tell you. Okay. In terms of average days on market, we're now sitting at 23 days on market. It went up and now it's kind of plateauing. I think a lot of people are expecting the rates to drop. So the savvy realtors and the savvy people are entering the market now. Whether you're a seller or a buyer, you're probably entering the market now, because buyers realize that after this week, if the rates drop, more buyers may enter the market. Sellers also realize that if there's another good announcement, well, we might see another shoot and surge in the number of listings. So if you understand the dynamics at play, you're kind of trying to time and gauge around that. Now, on the condo side of things, so let's take a look at the condos. And we'll do the same exercise. I'll fill in the numbers with you live. Okay, so this should be condos. Now, on the condo segment, so let's go back and look at the condo number. So we were sitting at 3.84 months of inventory extrapolated last week. Let's fill in this week. So 816 listings. Let's look at the number of sales. 164 sales. Okay. Now it just shot up. Now let's go back and fill these numbers in. So looking at last week, it went up by 1. So 922. Number of sales was 195 to 280 now. Look at the, like, it's a pretty significant adjustment. Like that's pretty alarming. So 280. And then let's go back one more week for supply, 1014. That number didn't change. Number of sales, 335. 3.5 months of inventory extrapolated. That's 3 weeks now rolling. Again, this is not a balanced market. Balanced market is 4 to 6 months. 0 to 4 is a seller's market. Balanced market is 4 to 6 months. Buyer's market is 6+ months. So with this information, looking at the supply and demand, we know this is going to bump up next week. We know that. It happens every week. I'm showing you now so you can see what I'm seeing. If number of listings is starting to decline, number of sales isn't going anywhere. Once they start narrowing in on one another, prices will adjust accordingly. And if you go in and you start looking at the prices, what are we seeing? We're seeing exactly what we're seeing on the freehold side of things. It isn't shifting in a material kind of way. It's kind of just doing the same up and down, but it's not correcting. Like there's no correction happening here. Just more inventory available on the condo side. If you look at the average ask to sell ratio, right under the 1 mark. So it's not too bad, right? Like if you look at January, when we saw that real bottom, if you want to call it that even, but it's been pretty normalized since then. Days on market, again, similar last week. And this is not a true number because the numbers are going to fill in next week. You'll see that, but I'm sure it's around the same average hovering days on market. Sale price, we've already gone over it. It is a downwards trend, but overall, it's nothing material. So if you're a seller, you may want to enter the market now before more sellers enter the market. If you're a buyer, you may want to enter the market now before more buyers enter the market. So depending on who you're dealing with is going to make a big difference in terms of the definition of what you're dealing with. What I've done with this week's market update that will be shared with you soon, it's just in production now with the batch team. I want to show you, we've done something a little bit different based on the feedback. What I've tried to do this week is I've tried to break it down so we have advice for buyers and we have advice for sellers. This, I think, is going to give you more bullet points to kind of pick up your phone and just talk live or on Instagram with. So these are real action items that I think will be very useful. So I think moving forward, unless the news is crazy, I'm going to try to parse it in such a way that we have advice for buyers, advice for sellers, and when it makes sense, maybe advice for investors. It's a little bit of a different approach, looks the same, but the information is a little bit different. Anybody have any questions or anything to add to that? All right, guys. That's the end of today's Market Minute. We've got a great session. This week's Thursday, by the way, this week's training is not on Thursday, it's on Wednesday. So keep an eye out for that. The following week, I think, is Halloween and Diwali, so we're not going to have training next week. Keep an eye out on the training schedule. And again, the grand opening that I've already gone over with you guys is Saturday, the 23rd of November. So those invites are going to go out shortly, but please bookmark that now. That date will not change. Saturday, 23rd of November, starting at 1 o'clock. Ribbon cutting will be at 2:30. So come in, we'll socialize, we'll network, we'll have a ribbon cutting, there'll be nice food and drink, and we're just going to have a good time. All right, we'll see everybody soon. Take care, everybody. Bye for now.
Thank you.